What's up, guys? Welcome back to the channel. So look at this trade opportunity. This is on card CHL. So I got involved in this particular trade opportunity. I got in position right here, and this is what it looks like when we had the analysis. So we're going to have a very insightful lesson today. In today's lesson, we're going to cover two major concepts: top-down analysis and key liquidity areas. So what you're going to do in today's lesson is you're going to firstly understand how you can get intraday trade opportunities by understanding multiple time frame analysis, that is understanding price across different time frames. Then secondly, you're going to identify key liquidity areas, which is going to serve as draw on liquidity, where price moves to liquidity areas to take liquidity. So you're going to have the understanding of where price is likely going to draw to. This is going to help you build your daily bias. And I believe a lot of you already understand the benefits of top-down analysis. When you understand price action across different time frames, it's going to give you a comprehensive market view. That is, analyzing multiple time frames provide a broader understanding of market trends and condition. And you know, one important thing to do in the market is knowing when to trade and when not to trade. Now, when you have a comprehensive market view, understanding what price is doing across multiple time frames, this is going to help you know the trend to trade and the conditions of the market to avoid. Okay, so this is one of the most important things you need to know about top-down analysis. Like I said, it's going to help you identify your trend direction. You understand where price is moving to, understand the overall market trend. So when you understand the overall market trend, even if you're trying to take counter trades, trying to take trades against the trend, you understand key levels you're going to be looking at. And when you have the understanding of liquidity areas, this is going to help you build a strong bias in the markets. Now, when you understand the trend from the higher time frames, you already know that the higher time frame is majorly for your directional bias, and then the lower time frame is going to be for your exit and entry points. So have understanding of that. Now, understanding this multi-time frame market structure can actually help you filter noise in the markets. Now it's going to help you reduce the noise and false signals in the market. You know the exact point you're going to get your entry in the financial markets, and this can also help increase your accuracy in the market. I've made a lot of lessons on top-down analysis, and I'm going to link those lessons on top-down analysis in the description. And this is another one, but I'm going to combine in this particular one with key liquidity areas, which is going to help you find consistency, find accuracy, and filter noise and false signals in the markets. So this is a lesson you would love to pay attention to. So if you're watching me for the very first time, I'm Solomon Wisdom, and here is Born to Trade. If you're interested in learning smart money concepts, you can look to subscribe to the channel. I have a lot of lessons on this channel that will help you find consistency and become profitable in the financial market. Let's jump straight into it. So this is card CHF, and currently we are on the 4 hours time frame. So 4 hours time frame is actually a higher time frame, so we can do our analysis starting from the 4 hours time frame, dropping to the lower time frames to see good trading opportunities. So if I try to zoom out currently, you're going to see that this particular pair has been in a downtrend. I hope you can see without me marking the structural points. You already know that we are in a downtrend, and maybe we should go ahead and read the trend for those who don't understand. So at this point, this is where we had the shift in structure. You see price had a little pullback, so that point was a market structure shift. That is if you're reading from the 4 hours time frame. Now at this point, I think we had another break of this low. I think this particular one was a spike, but if you continue to look at the trend, price continued to the downside. Price is trending massively to the downside, and this is another area we had a clear break of structure to the downside, and since then you see how price reacts massively to the downside. Now at this particular point, what do you understand? You see the candles price push to the downside. Now when we have this kind of momentum push to the downside, we always have what we call an expectation in the markets. When you have this, the expectation is that we're going to have a pullback. When we talk about the pullback we're going to expect, it has to be a complex pullback, not this little pullback we're seeing. You see, this is actually a single candle pullback. We already have another single candle pullback, but looking at how price reacts massively to the downside, and if you look at the other areas we had pullbacks, you see we had little pullback, and here we have little pullback. Over here we had little pullback. Right here we have another little pullback. Why do we have this kind of pullbacks? We have this kind of little pullbacks because the momentum price was pushing to the downside is not as aggressive as the one we have right here. So at this particular point on the 4 hours time frame, you can see price moved aggressively to the downside. And if you try to look at where price was trending in, this is the price range. This is the highest high of this range, and this is the lowest low of this particular range right here. I hope you can clearly see that. So this is the whole trading range. So everything we're doing is inside this trading range. Now what we have to keep in mind is that no matter the pullback, price shouldn't take this particular high because we are still in a downtrend. If price takes this high, that is when we're going to expect a shift in the market structure. Now let's zoom into the current price action. Let's zoom into what price is doing while pulling back. Now at this point, you see price pulls back. We have good areas which we could look to trade from. Now at this point, what I can clearly see is that we have an efficient price action at this particular area. While price was pulling back, price was efficient, and if you look currently, you see price has mitigated this fair value gap. You see how price rebalanced this fair value gap, and we had a good reaction to the downside when price rebalanced that fair value gap. But now let's look at what I saw in the particular market. Now when I was looking at this market, I have my trading style, how I love seeing my trading opportunity. If you look at this particular area, I have what I call a liquidity sweep. Now a lot of you understand what I mean by liquidity sweep. I don't play with areas price takes liquidity in the market. So this is a very good liquidity area, and if you pay attention to the turtle soup pattern, and you know the turtle soup pattern is where price goes to take liquidity. If you pay attention to that, you're going to agree with me that you might have gotten an entry if you looked at this from the lower time frame. So price takes this old low, I will have that momentum push to the upside. Now when price push to the upside, what we fail to do is to create a new high, because we can clearly see that price was actually looking to break above this particular high, but it was too hard for price to take that particular high. Now if we try to mark, what you can see is that price sweeps the liquidity and a pullback. Now you need to understand the difference between break of structure and liquidation. What price did at this particular point is what we call liquidation, taking the liquidity above this high, and we have a pullback. So don't worry, sooner or later I will talk about liquidation and break of structure. Now price took the liquidity, we had a pullback, and price is here to break above this high. Now if price breaks above this particular high, I have a trade opportunity, but for now, currently on this time frame, I don't have any break of structure. Now let's press price forward. Price breaks above this high, so this is now a valid break of structure for me. Personally, based on how I look at the market, I have a trade opportunity. What are the confluence am I seeing right here? Now we have key liquidity area once more. We have another liquidity area which I could look at. Now here's going to serve as my inducement area, inducement liquidity area. Now I have pricing efficiency at this particular area, and I have my point of interest at this particular low right here. So this is a very good area. This is a very good point of interest which I could look to trade from if I want to get involved in this particular market. Now this is where dropping to a different time frame to look at the markets. Now the 4 hours time frame is a higher time frame, then the 2 hours time frame can serve as a middle or medium time frame. So let's see the 2 hours time frame. So currently this is the 2 hours time frame, and now you can see the trade opportunity more clearer. I hope you can clearly see it. This is where we have that liquidity sweep, and we have more like a relative equal low right here, where price takes the liquidity at this low, and you see how price pushed with momentum, then takes the high, a little pullback, giving us this inducement area, and finally we have the break of structure. And what you can clearly see is that we have this area, and inside this particular zone I marked, you can now see we have another block. Even though we include this week we have right here, and you know, including weeks, it's part of my trading style. I hope you already know that. So this is already a good opportunity which I'm looking at in the financial market. Now let's press price forward to see what price presents. Now price comes, takes the liquidity at this low, and we start having a little reaction, and now it seems like price is ranging a little, because you see price is now between this particular low and this particular high. Now no clear price action, price is now in a little range, and this particular little range I'm seeing right here is actually a very good one for me, because this is a liquidity area. Now one thing you need to understand while looking at the market is that once price is building this kind of liquidity above your point of interest, then that point of interest has high probability of playing out. It doesn't mean that liquidity is the only thing you need to identify high probability trading areas in the market, but it increases the probability, and we have other confluence which you already know. Now let's press price forward once more. Now price continues to build liquidity, and at this point we have the sweep of that liquidity, and this is what you need to understand in the market. Now that we have a sweep of liquidity, this is another good area. And one thing I don't really like about this particular sweep of liquidity is that if you are the type that looks to trade a turtle soup pattern, there is no entry point right here, because this particular bearish candle took the liquidity. Now this bullish candle ought to close above this high. If this bullish candle was able to close above this high, then we would have expected a retest of this high as our auto block, then look to trade to the upside. But in this case, we didn't get that, and this is what you need to understand in the market. Sometimes you might have a very good trade opportunity, but getting an entry for that trade opportunity might not be available in the market. But let's see. Now price starts to move away. You see a good opportunity, equal lows which has liquidity, and you already understand what liquidity areas means. A lot of stop loss is resting at this low. If there is any support and resistance trader, you'll be looking at this particular low to trade from, because these lows has given good reactions in recent time. You see, at first price came for the retest, we have good reaction to the upside. You see, price came again, we have a good retest, good reaction. The third time, price has retested this particular level 3 good times, and we equally have a good reaction. Now they might still be respecting the fourth retest, and in the process of this, a lot of stop loss is resting underneath this low, which means money is resting right here. Now this is where price comes to sweep liquidity, coming back to trigger the stop loss under this particular level. Now once price takes liquidity, we're going to expect a higher price, but don't forget that we still have a very good trade opportunity right here. We're still looking at this particular low, and there needs to be mitigation for this particular low. Now let's press price forward to see, and you see price moves away without coming back to our low. And why did this happen? Price took liquidity, and it has to move to the opposite direction. So if you have a stop loss right here, price takes you out, and we have that reaction to the upside. Now pressing price forward. Now what you can clearly see at this particular point is that price starts to pull back, and a lot of people might actually be looking at this particular area if they want to get involved in the market, but this actually does not meet the criteria I look for when I look to trade from the financial market. But let's press price forward and see. You see price retest that particular level, and we had a good reaction to the downside, which breaks structure. Now if you want to get involved in the market, looking at a different time frame can actually help you get involved in this. So this is where we can actually decide to drop to another lower time frame to see what the market's present. Now this is a 30-minute time frame, and if I try to zoom into this particular area to see what price was doing, now at first we have this particular point of interest. This is a very good area, but it doesn't meet the criteria I look for when I look to trade from the financial market. This does not meet my criteria, but for some reasons it meets the criteria for some people, because you can clearly see that we have another inducement area right here. I hope you can clearly see these are equal highs right here, and price came, swept the liquidity above the equal highs. We have the mitigation and the reaction to the downside. Now what can we clearly see in the markets? Price breaks structure to the downside. So this explains that we're going to have a continuation to the downside, and this is actually what we're seeing on the 30 minutes time frame. Now if you try to mark your point of interest right here, you see we have a very good point of interest if you're looking at this particular area, and you can clearly see that price is also building another liquidity area. If I try to mark this level, this is more like a trend line liquidity, so price has to mitigate this level to continue to the downside. And what you need to understand is that this is happening because price mitigates the 4 hours fair value gap, and price is currently reacting from that. So this is what you can clearly see from the higher time frame. So we've switched back to the higher time frame. Now on the higher time frame, what you can clearly see is that price rebalanced this fair value gap right here. I hope you can see that. So this is the 4 hours fair value gap. Price rebalanced it, moved to the upside, and price was able to mitigate this particular zone right now. Having the general understanding that the higher time frame is bearish and price is currently reacting from a higher time frame supply level, having the understanding that price is reacting from a higher time frame supply level, and you still have a lower time frame supply level right here, so this increases the probability of this particular trade opportunity playing out. Back to the 30 minutes time frame. So you can clearly see from the higher time frame that price is reacting from the higher time frame supply level. So deleting this, now this makes this a high probability trading opportunity, because you have the general bias of what is happening on the markets. You have a comprehensive view of what you see in the market. Price is reacting from a higher time frame supply level. We have a mitigation of this level, and price is coming back to mitigate this particular level, which has inducement areas, and currently we have a trend line liquidity at this particular point. So this makes it a high probability trading opportunity. Don't forget that we still have another higher time frame demand level at this particular level, because we were able to identify this particular level before price respecting the higher time frame supply level. Okay, now all we have to do is press price forward to see how price reacts from this particular level. Now you see price comes back, retest our level, and we have that massive reaction to the downside. Now price continue to move away, and you see price needs to take this particular low before we can actually look to see other areas which we could trade from, because you can clearly understand that the higher time frame bias is bearish. Okay, price is bearish, but we still have this demand zone which we can look to get involved in while looking at the financial market. So zooming in to this particular area to see how price reacts. Now you see we have a little retracement and price reacts massively to the downside, and you can clearly see that we have this area as a trend line liquidity currently. Okay, you see we have more like a trend line liquidity, but price comes back to sweep the liquidity at this trend line, and let's see how price reacts. Now price continues to push to the downside, and at this point you see how price is returning back to this particular point of interest, and at this point a lot of people might be discouraged in taking a trade from this particular point of interest. Let's see the 2 hours time frame. So here is the 2 hours time frame, and you can clearly see that price is returning back to this particular demand level, and a lot of people might actually find it confusing to trade from this particular level. A lot of people might not have the confidence to trade at this particular level because price is reacting massively to the downside, but we still need some other confluence that can give us the confidence to take this particular trade. Let's see what price presents. Now price reacts massively to the upside, and you see price came very close to this point of interest. Now price starts to slow down a little. Now price is slowing down. This is where a lot of people might actually decide to identify here as another liquidity area, because this is a slow price action at this particular point. Now price starts to build liquidity at this particular area. See, price starts to build more liquidity. Now this is another confluence you need to take this particular trade. Now let's press price forward to see. Now you see we have more like equal lows at this particular area. Price build equal lows, which is a very good liquidity area. Now if you look at this particular area, you can see that price also have this relative equal highs at this particular area. So liquidity is resting currently above the high and underneath this low. I hope you can clearly see that liquidity rests above the high and low, and you can see we have a higher time frame point of interest. We have a very good level right here, and this is where you could pay more attention to the market, because immediately price sweeps this particular low, price is going to tap into this level and is a very good area to get involved in the financial markets. So let's see how this plays out. Now you see how price reacts. Price takes the liquidity underneath the low. So price takes the liquidity, and we're going to get a reaction to the upside. Now what you have to understand is that once price takes this low, we're going to expect higher price from this particular level, because price takes the liquidity and it mitigates a very good demand level. Now you see how price reacts massively to the upside. So this is where I got the second trade opportunity which I was looking at. At first I had this demand level. Now price takes the liquidity underneath the low. We have a good reaction. Price takes the liquidity above this particular high. Now this is where I had other interest to trade from, and the particular setup I showed you when the lesson started, this is where I identified that particular trade opportunity. This is where we have a demand level. We have another demand level on the 2 hours time frame, while price was reacting from the 4 hours demand. And from what you can clearly see, this looks very similar to the points of interest we had right here. After price filled this price inefficiency, we had the mitigation of the higher time frame supply level. So while price was reacting from the higher time frame supply level, we have other demand level inside the higher time frame supply level, and you see it was able to hold price and it pushed price to the downside. This is something similar we are seeing on this particular area. What can we see? We have a higher time frame demand level, and price came back to mitigate the higher time frame demand. Not only coming back to mitigate that, we have a liquidity sweep which increases the probability, and this is a very good trade opportunity. You see that liquidity sweep, mitigation of a higher time frame demand level, a massive reaction to the upside which was able to take liquidity as well as break structure to the upside. Now this is a very good demand level which we could look to trade from. This is an inducement area, and this is the whole trade opportunity. Let me show you once more. So this is the exact setup when I shared it. You see I marked our liquidity sweep while price reacts massively to the upside. So this is exactly what that trade opportunity looks like when you look at it from the 2 hours time frame. Now all we have to do is wait for price to come back for mitigation at this particular point. Now let's see how price returns. Now price starts to react to the upside. So if you got involved from this particular demand level, if you didn't look to trade from the second level, already have it in mind, you're already in profit. If you took direct trade from this particular point of interest, you're making profits in the market. But personally, I was waiting for the mitigation of this particular second level, and this is more like waiting for an entry confirmation, approaching the market with a confirmation entry pattern. But we can clearly see that this is actually a trendline liquidity. See price building trendline liquidity at this particular area. So you see how liquidity areas has been helping us identify good areas in the market where price is coming back. So having this trendline liquidity signifies that price is going to come back to sweep this. There is need for price to come back to take this particular liquidity. Now you see how price returns, takes the liquidity, and we have a massive reaction to the downside. And let's see how this plays out. Now price comes back for mitigation right here. So let's jump to the 15 minutes time frame, or possibly to the 30 minutes time frame, to see how price reacts. Now this is the 30 minutes time frame, and you can see the whole price action. So seeing it on the 30 minutes time frame make it more clearer. I hope you can see it's more clear from the 30 minutes time frame. You see we have our trendline liquidity sweep, then price comes back for mitigation. So this is where you're going to get involved. Now while looking at this particular point, you need to be very careful. This is where I got it wrong in this particular trade opportunity. Yeah, I got involved while price returned back to this particular area, but you can clearly see that we have a very good supply level right here which could hold price. Have it in mind that the overall trend structure is bearish, so this particular area could hold price. But I was actually looking to make 4% from this particular trade opportunity, so my target was at this particular area. From this particular level to this particular supply level, price offer, that is 3R, you're going to make 3 risk to reward ratio to this area, but I was looking to get my 4% at this particular area. So let's press price 4 to see how this reacts. Now price starts to react. So if you're actually looking to make 3R from this particular trade, have it in mind that price hits your target and you got 3% from this particular trade opportunity. But personally, I was looking to make 4% by price hitting this particular area, and I had my stop loss at break even. I put my stop loss somewhere here. Now what you see is that price reversed from that particular area. So this simply explains that the higher time frame buyers will always be the strongest in the markets. Now we see price react from that particular area. Price actually reversed from that particular area. I hope you can clearly see that. So if anyone was looking to trade from this particular supply level, you see it was actually a good one, because we have this liquidity area, price sweeps it, mitigates this level and reacts to the downside. But have it in mind that while taking my trades, I'm never going to take any trade from this particular zone. It's a good zone, but it doesn't meet my own criteria because I still have price inefficiency right here. So sometime in the future, price will always come back to filling this particular price inefficiency we have at that particular high. Just have that in mind. Now finally price breaks underneath the low, but it's still inside the demand level, but I don't see price continuing up in this particular area. And you see we have some trendline liquidity and price is already sweeping that. So we have a break of structure, but we don't have a good opportunity. Even if you have a supply level at this high, price is not going to mitigate anything right there. Let's see. Now you see price react to the downside and we have another break of structure, and this is where we have a good opportunity. Now if you're looking to trade in continuation of the trend, this is where you're going to make money from the financial market. But we can actually identify here as a liquidity sweep, and we are already trending in line with the order flow. We have the mitigation of this supply level, even though I didn't see what price mitigates at this particular level, but price respects something from there. We have the continuation to the downside, and if you try to identify your liquidity inducement area, you can agree with me that this area is an inducement area in the market. It's actually a very good inducement area, and where is our point of interest? If you're looking to trade again, you're going to trade right here. This is the continuation of the order flow. The order flow is currently bearish, so if you're looking to get involved in the market once more, this is where you're going to look to get involved in the financial market. And let's press fast forward. You can see that price comes back, mitigates the level, and we have that massive reaction. So if you got involved in this particular trade, you would have been making 6% in the financial market. But this particular trade wasn't really a good time to trade, because this particular price action occurred during NFP, and trading during the news events is not the best thing to do in the financial markets. And I hope you can clearly see from here how you can get multiple entries looking at price from multiple time frames. Now, all the analysis and all the trade we are getting involved in right here, if you're actually looking at price from one particular time frame, maybe say looking at price from the 2 hours time frame, you're never going to get involved in this particular trade. But when you scale from time frame to time frame, trying to see what price is doing, having a comprehensive view of the market, understanding what price is doing across these different time frames, this is where you're going to get involved in the financial market. And I hope this particular one makes sense to you. One thing I need to take away from this particular lesson is that price will always draw back to areas of liquidity, and you can agree with me on that. When we had this equal lows right here, price came back to sweep that liquidity, we have that reaction to the upside, and you can clearly see that when we had this liquidity at low, price sweeps it, we have the mitigation of this level, reaction to the upside. Now we have this relative equal lows right here, price takes the liquidity, that reaction, we have the mitigation of that level, price offered 3% before the reversal, and you see how price has been sweeping liquidity areas and it's dropping to the downside. This is a good one, and I hope you got value from this particular lesson. Learn how to analyze price across different time frames, not just analyzing price but understanding what price is currently doing across all these time frames. So I hope this lesson makes sense to you, and if you got value from this particular lesson, consider subscribing to the channel and drop a like on this lesson. And have it in mind that our mentorship is coming up this month, so if you have interest in joining our mentorship, this is actually advanced smart money mentorship, which is going to be a life-changing mentorship. You can look to enroll. So thanks very much for watching this particular lesson. I hope it makes sense to you. See you in the next lesson.